Financial Detox. I'm Jason Labrum, and we are back in studio doing a show. With me, as always, is the man, the myth, the legend, Alex
Klingensmith.
Oh, we both did it.
That's okay. It's
what
December
up?
1st. Let's go.
Alex, welcome back from a Thanksgiving holiday. Hope you had a great one.
Thank you.
I know you did. So, Alex, you're so good at organizing these shows and keeping me on track. Why don't you get us started here with kind of the show outline and what we're doing?
This one's a quick one. We have 1 month left of the year, right? It is December. So that means that if you're all of a sudden realize, oh my gosh, taxes are coming, you know who you are. Basically everybody listening, I bet.
Right.
We have a few strategies we're going to go over right now that you need to focus and prioritize on. Maybe you've already done one or two of them. Maybe you haven't. We want to be a resource for you. If you want to learn more about these strategies, any one of them, please reach out to us at financialdetox.com or jason@financialdetox.com is the email address that we respond to almost immediately. And here we go. We're going to knock them out right now. Let's go.
Yeah. And you're probably picking this up, by the way, on YouTube. So subscribe, like below. You can click the links below to get more information. And forgive me if I cough, lingering cough that won't go away.
That's okay. It's that time of year. All right. Number one, fully fund retirement plans. So there's a lot to this one. Why don't you break it down a little bit for people, Jason?
Yeah, retirement plans are probably the most simple, forward, right in front of your face way to save money on taxes by fully funding your retirement plan. Whether you're an employee at work, whether you're a business owner, you can contribute to a retirement plan. And for that contribution, you can get a tax deduction. And that's really important to make sure you understand what are the maximum amounts I can contribute and are you using it. 401k plans, you can make a contribution. Now, something that in the same vein that may not give you the tax deduction today, but could end up being a big tax advantage later is the Roth 401k contribution. Most of you have a 401k, and inside that 401k, most of you will have a Roth component where you can put money in that's after tax, but then you get tax-free growth indefinitely. That's pretty special.
Yeah. Won't save you money on taxes this year, but it could be a long-term strategy. I think that there is a lot more to that one as well. Yeah. And if you're thinking about it, well, that's too late. No, it's not. If you already have cash in the bank or something, you're going to forego maybe your December paychecks, for example, because those paychecks are now going to be elected to be deferred into those retirement plans. But if you're able to save more of your own money and pay the IRS less legally, I think I always want that, right?
Yeah.
Number two,
Alex, before we leave, and I'm sorry, because you're keeping us on path here on time-wise, but it's really important from a business owner's perspective. There's been some changes in the rules and you can establish retirement plans now later than you ever could. So if you own a business or you haven't quite put your 401k plan in place, it's not also too late for that. You can set up your retirement plan now. In some situations where you're a doctor, you have a small number of employees, you're the older employee, or you're older than most of your employees. Help me. Thank you. Then there are some really tax advantaged ways to reduce your taxes through cash balance plans, defined benefit plans. And so those are still an option for you too. So business owners, this is the time.
Yep. Number two is hire a tax specialist for a cost segregation analysis. Wow.
Yeah, it's a big one. This is a big one. This is for more of your business owners, property owners. If you have always wanted a rental property and you've bought one here recently, you can actually do what's called a cost segregation analysis, where they break down that property and they make sure that you're getting the full depreciation of short life items now in a single year. Here's an example we just did for a client. They were looking at a $2 million property they were going to short-term rent. They have to spend about 150 hours a year working on that property, which they will, no problem. They got to depreciate the property based upon a cost segregation analysis, and it literally created over $1 million of immediate depreciation, $400,000 back in their pocket this year. That's what cost segregation analysis is. We have great partners, tax partners, who specialize in that. And we would invite you to, if you're thinking about purchasing a property, airplane hangar is the one I worked on earlier this morning with a client. Buying an airplane hangar, almost all of it gets to be cost segregation, and they get to depreciate almost all that immediately, saving them a lot of money in taxes. It's a really good strategy.
I like that one. Number three, qualified charitable distributions by year end.
Yeah. Alex, we do this so many times for clients where they're making distributions, they're making contributions to a charity with cash but then they're turning around and taking a required minimum distribution from their IRA. And we say, wait, hold up a minute. Let's just take the required minimum distribution from the IRA, put that straight to the charity. That's called a qualified charitable distribution. And now you don't have to pay tax on that distribution from your IRA.
Or doesn't the 501c3 doesn't either, right? So basically you're able to give, if you're charitably inclined, you're actually giving more by doing it this way.
It works great.
Number 4, tax loss harvesting.
Too many people wait till now to do this. Tax loss harvesting should be happening throughout the year. But if you haven't done it, now is the last moment. In the last minute here, you could probably do some tax loss harvesting where you look at positions that you own. You may still want to own that position or something similar, but not substantially the same. You can sell that position, take the loss today, and then go ahead and buy back something that's not substantially the same to complete your portfolio, or you can wait 31 days and buy it back. But taking tax losses is a great way to reduce your future tax on and your current tax on other capital gains, dividends, income, and such.
Kind of a piggyback on that one too is if you have a non-retirement account and you're thinking, gosh, I really want to diversify maybe a concentrated position. You've got 30 days left or so, or whatever day this is when it goes live on YouTube, but you kind of have to make that decision by the end. You have to make the decision by the end of the year, not kind of. So if you're going to diversify your portfolio and you're looking at your projected AGI for the year, it's kind of rip the Band-Aid off time. Right?
It is. And if you have a position that, hey, you've taken a beat down on it, wasn't a good pick, but you still want to own it long-term, sell it and buy it back in 31 days, or sell it and buy something that has a very high correlation that isn't substantially the same, and take the loss, because that loss is real money to offset either current capital gains or future capital gains.
That's right.
Yes,
Roth conversions.
Yes. Roth conversions are huge. It's amazing how I would say 9 out of 10 of these scenarios we run for clients, Alex, they are showing pretty significant deltas or positive outcomes in their overall wealth by doing Roth conversions. And what that is about is just taking money that's in an IRA that you're going to have to take out eventually, and you're going to have to pay tax at ordinary income rates. And instead of waiting till the government requires you to, you say, I'm going to go ahead and do some of that Roth conversion today, convert that money into a Roth, that IRA into a Roth. You have to pay tax today. So it's not a tax saving strategy today, but it's probably a tax saving strategy over the long run. And again, another thing to unpack individually and personally with all of these. We're just going real quick today, and we're not trying to do that to be elusive. What we're trying to do is set up an engagement where you can visit with us for no cost and no obligation, and understand how these things work for you personally and individually.
Yep. And then the last one we're going to hit on today, there are many, many more, but we don't have time for all of them, is to fund a donor advised fund.
Yeah, great example. We had a client who was talking about their estate, and we're reviewing their estate plan, and they're going to leave a lot of money behind at death to particular charities. That client was also in a high income tax bracket right now. And I said, well, you have the money right now. Why wouldn't we give it away now? Get the tax deduction today, and then that money can sit in a donor advised fund, your own personal kind of family foundation, and you can give that money away over time when you see fit. And you could even put on your kids as future owners, so that could become a lifetime legacy, a multi-generational giving and legacy for you and your family. And you get the tax deduction today while you're in these high income earning years. Turned out the client did it. It was phenomenal. Put $500,000 back in their pocket literally today from a tax saving strategy. So big deal. Using donor advised funds as a mini family foundation, a type of a personal foundation, is a phenomenal way, if you're charitably inclined, to get some money in the hands that you want to give it to, and also do it in a tax efficient way.
I love it. That was 6 tax strategies to save you money on taxes by year end from Jason and Alex.
And we kept it under 10 minutes, or right at 10 minutes, Alex. So well done. Please check us out, subscribe, like below, click the link, and we'll get you more information. You can always download our great tax advice reports. And we look forward to having a one-on-one consultation with you, no cost and no obligation, to help you make the best decisions you can make, be financially detoxified, invest well, and live fully. Thanks for tuning in. I'm Jason Labrum with Alex Klingensmith Financial Detox. We'll catch you on the next show.